Hello, everyone, and welcome to the episode 27 of JustDario Cigar Time. And man, we have a packed show today. Next week is shaping up to be another potentially turbulent one. And not just because everyone will be nervous about Nvidia's upcoming earnings, though, let's be real. I expect them to keep cooking the books like always. No, the big story, the one that caught everyone, including me, off guard, to be honest, is something I didn't think would be back in the spotlight so soon: tariffs. If you've been closely following my posts on X or reading my articles, I've been warning for a long time about Trump's strong commitment to his agenda this time that is serving his second presidential mandate. This isn't the same Trump from his first term, folks. Back then, he had to play nice, so to speak, to secure re-elections. But now, he got much less constrained. He's got a higher tolerance for market tantrums, and is laser focused on leaving a positive legacy behind him. Of course, financial markets are still important for him, but he is now playing a bigger game, one centered on reshaping the US economy and geopolitics, and eventually earning him a spot in the history books. Why not? Right next to the likes of Ronald Reagan. Let's briefly rewind to early April when Trump came out swinging, announcing a slew of tariff policies. Markets wobbled, and he quickly had to backtrack. Why? Because financial markets were completely caught off guard at that time, and without some serious concessions, they were facing the risk of an implosion. So he agreed to a 90 days pause on tariffs for most of the countries except China to cool things off. Okay, smart move, but it didn't deliver much on the trade negotiation front since then. The only deal Trump administration managed to get was a trade agreement with the UK, a country where the US already has a trade surplus. Honestly, it was more of a PR stunt than a win. But yet, this was not enough to calm financial markets that started to wobble again after figuring out how 145% tariffs towards China were potentially causing the risk of US being hit by serious product shortages in the summer. So Trump had to cave on this front as well. Donald Trump was clearly falling in a tight spot, losing credibility on the global stage and running out of room to maneuver. His strategy to reindustrialize America and rebalance the US trade deficit was stalling, considering he could not secure any major win on the trading negotiation front, differently from the many promises that him and his administration kept delivering through the megaphones of mainstream media. Then last Friday, Donald Trump dropped a bombshell that nobody saw coming. Starting June 1st, the European Union will face a 50% tariffs on goods exported to the United States. Of course, pretty much everyone rushed to criticize his move, calling it quote-unquote nonsensical. However, this time, I don't agree with that, and I will explain you why. Let's take a step back first. This move, when you look at it strategically, is actually pretty clever. Unlike his scattershot approach back in April, where he was taking on everyone at once, Trump is now picking his battles. He's zeroing on Europe, which, let's be honest, is the one player on the global stage that so far is openly antagonizing Donald Trump and his agenda. By slapping tariffs on the EU, he is sending a message to the rest of the world. Get in line, or you're next. By Europe, it's about leverage. Trump is not just trying to shrink the trade deficit, though that's part of the plan. His bigger goal is to reshore industrial production, to bring factories back to the United States for everything, especially strategical things like microchips, telecommunication gear, advanced weapons, and so on. Europe's is a prime target this time because it's in a weak spot. What can the EU offer the US to dodge tariffs, more lobster imports, a few extra NATO bucks? Nah, that's not gonna cut it. In the past, the EU could placate the US by buying American weapons or boosting defense spending briefly. But now, they've made it clear they are rebuilding their own arms industry, especially after sending so many of them to Ukraine. So they are short on bargaining chips. And here is where it gets dicey. Europe economy is already on shaky ground. Inflation is still a problem, furthermore is underreported. Growth is stagnant, and the debt situation of the European Union is a mess as well, and I will come back on this later. If the EU doesn't play ball, Trump tariffs could tip them over the edge. The EU should have learned by now that they better don't mess up with Uncle Sam. Remember when Europe was causing too much with Russia and buying a lot of cheap natural gas from Putin? Well, then out of nowhere, the Nord Stream pipeline got sabotaged. Officially, we don't know who did it. But let's not kid ourselves. If you got two brain cells to rub together, you know who did it and who benefited from that. Coincidentally, Europe, after that incident, started to buy pricier US natural gas. So, no need for further comment here. They have to be careful because a similar playbook is in motion now. If the EU doesn't come to the negotiation table with serious concessions to Donald Trump, both on the economic front but also on Trump's geopolitical priorities like Ukraine, this time they might suffer a significant market crash voluntarily triggered by external actors. And here is the genius part from Trump's behalf. Be aware the US Treasury market and US broader economy are resilient enough still to weather the storm of a significant correction in markets. But the European economy is teetering, and Trump is clearly betting he can force the EU to bend the knee, and this might just work. The European Union is in a tough spot. Stock markets out there, like the German DAX, are at the level that scream bubble from the bottom of their lungs. The German economy has not been growing for years, and is not going to grow even in 2025, apparently, with the latest estimates bringing down the growth forecast to 0%. The car industry in Germany is a mess, along with all major industries in the country and in other European countries. Furthermore, the European Central Bank is stuck between a rock and a hard place. Politicians want them to cut rates to juice the economy, but inflation is still a problem even if they're trying to hide it. And in reality, they should have rates much higher. So clearly, the European Central Bank is in a tough spot. And if Trump keeps the pressure on, this time we could see some serious cracks in European markets very soon. Keep a very close eye on that. What I described so far is just part of the story of what happened on Friday. There is more, way more, and it wasn't just about Europe. Trump also took aim at one of America's corporate darlings, Apple. In a very public, no-nonsense statement, he told Tim Cook, if you want to sell iPhones in the US, you'd better start making them here. Not in China, not in India, but in US. And what if Apple doesn't comply? Well, they'll face tariffs starting at 25%, with the threat of even higher ones down the line. Folks, this is huge, and I'm really excited to talk about it because it's something I've been harping on for ages. The core issue here isn't just about Apple, it's about how US companies have gutted America's industrial base. For decades, they have shifted production to low-cost countries. Not even to benefit those nations where wages, yes, increase, but just a little bit in many years. But in reality, they did so to fatten their profit margins significantly. And where did these profits go? Not back to the US, but to tax havens. Through complex financial schemes, they have been channeled almost entirely back to their shareholders. This isn't a new problem, and it's not one that can be fixed overnight. By offshoring, companies like Apple have extracted value from both the US consumers and the countries they operated supply chain in. Meanwhile, American consumers trying to keep up for the standard of living have piled up on debt. Credit cards, student loans, consumer debt in general, you name it. I wasn't surprised this week when I read that Klarna, one of the buy now, pay later giant, is seeing defaults surging for its consumer loans. And the ridiculous explanation for that is that they realized that people that were borrowing using buy now, pay later scheme to pay for food were actually subprime borrowers. I mean, wow, seriously? I mean, if a person is so desperate it has to borrow money to buy food, how high do you think is its personal credit score? I mean, isn't this completely ridiculous? So, back to Apple. The Trump move against Apple is a warning shot to every US company that has been trying to play a similar game. Trump knows that some of these big corporations have been playing around with him a little bit. One side announcing big investments in the US to appease him, but in reality, dragging their feet not to deploy them as quickly, trying to buy time, because ultimately Donald Trump is going to have to face US midterm re-election and then in about 3.5 years be out of the scene. So if they manage to kick can down the road long enough and sterilize his move, everything can remain as it is right now. That is the most beneficial for these companies. These people are betting they can outlast him to wait out this term and go back to business as usual. But Trump is not playing around this time because he wants results now and clearly is willing to hit where it hurts. And as I warned many times, he's really focused on leaving a good legacy behind at the end of this second term. And perhaps that's what he cares the most. Not surprisingly, Apple's stock had been sleeping for a week, closing over and over in red. Likely, insiders already saw this coming. So investors are now waking up to the fact that tariffs could potentially eat into the margin of specific companies, especially for those companies overly relying on overseas supply chain. So people need to be careful because if they are now holding stock in companies that will be slow to restore and they get Trump angry, then they can start being hurt specifically as a punishment. To give the example, fairly speaking, Trump's push to bring factories back to the US is a noble goal, but it's not going to be cheap. Higher production costs gonna mean higher prices, and that's fuel for inflation. That is already a global problem, even if central banks, like a rotten, broken record, keep trying to convince everyone they got it under control. Don't let the officially manipulated numbers fool you. Everyone living in the real world knows inflation is worse than what the public officials are admitting, and many things are screaming about that. For example, like gold prices are screaming that truth loud and clear. Central banks, like Bank of Japan and the European Central Bank, are in a bind. They keep printing money, monetizing debt to keep economies afloat. But again, that keeps pouring gasoline on the inflation fire. They can potentially raise rates to cool things off, but they will tank the economies. They could cut rates to stimulate growth, but that will make inflation even worse. Summarizing everything, they're in a lose-lose situation, and now tariffs are back in the picture. In this situation I just described, gold can potentially become very important. And here today, I would like to spend a little bit of time to open a small section to once again try my best to describe the problem of paper gold out there. The price you see for gold in the screen, that's for paper gold, not physical gold. And right now, there is a 100-to-1 ratio between paper gold and the real physical one. And now I want to use a very basic example in order to try to make everyone understand what can be the incredible consequences here. Imagine that me, Dario, I got 1 ounce of gold, and I also got 100 friends. And without them knowing about each other, I borrow money from each friends using the same ounce of gold as collateral, the only collateral that they can claim in case I don't repay the debt. Everyone thinks their loan is fully backed, but oops, all of a sudden I get hit by a bus. When those 100 friends come to collect the collateral, everyone shows up and there is only 1 ounce of gold to go around. So as a consequence, mathematically, each loan is going to be worth just 1 out of 100 of what they thought. And this is exactly the situation between paper gold and physical gold. So if inflation keeps spiraling and people start demanding physical gold instead of paper contracts, this whole system could implode. The price of physical gold could skyrocket, or paper gold could collapse. Either way, countries and investors holding physical gold in their reserves are going to be in a much stronger position. The European central banks is already sweating at this. And this week they came out warning that their system could have significant problem if people start asking for physical gold settlement. Even the LBMA, we know that they claim they have massive gold reserves, is keeping longer and longer to deliver physical gold. So clearly, there is a big smell of troubles, and Trump might have just thrown gasoline on top of this. And let's not forget Europe debt problem. That's a bad one, potentially even worse than the US. In the US, most of the debt is federal and out in the open. In Europe, well, I can tell you by experience they're masters at hiding it. Take Germany. They keep their official public debt low to avoid the ghost of the Weimar Republic. But I can tell you they offloaded tons of debt onto public institutional regional governments with implicit guarantees that are not included in the count of the general public debt. This is an open secret among financial insiders, but the optics still fool most of the people out there. Trump tariffs can potentially expose this and trigger a debt crisis in Europe. All right, guys, I think we touched upon so much today. There is a lot to digest. thanks for tuning in to this new episode of JustDario Cigar Time. If you enjoyed this, please hit on the like and subscribe button. That is gonna help to broaden the audience here on YouTube. But also would like to say thank you everyone for your support on X and for reading and commenting my article on JustDario.com, because I really love hearing from you guys.